Welcome to the Techno Fundamental Report for April 24th. The myth of Sisyphus. He upset the gods, and as a result, they punished him by having to push a boulder up a hill. And every time he get to the top of the hill, the boulder rolled back down again. But it's just something that's true about life, embracing the struggle. With the stock market, we have to just embrace the fact that it's a struggle, it's difficult, but it's a long-term proposition. You just have to remember that. Ronald Reagan, I really have total respect for Ronald Reagan. No government ever voluntarily reduces itself in size. Government programs once launched never disappear. Actually, a government bureau is the nearest thing to eternal life we'll ever see on this earth. Ayn Rand. The government was set to protect man from criminals, and the Constitution was written to protect man from the government. We've got a problem with this government. We've got to deal with it. Nassim Taleb wrote The Black Swan. Difficulty is what wakes up the genius. A lot of truth to that. Now, everyone's talking about recession. Now, I just don't see it. This is initial jobless claims over an extended period of time. And there's just been basically no change. So when you go into recession, one of the first things you're going to see is people getting laid off and unemployment numbers deteriorate. Now, this is an interesting study. Now, this has to do with market bottoms. Now, the market is trying to make a bottom. So one of the problems we have is when you get into a bottoming process, it can be volatile. And so the VIX, which is the volatility index, is an important indicator to look at. So when you get these extreme readings of where the VIX goes to 50 and then down to 30, and which is what's happened here. I mean, we've seen here where the VIX went to 50 here recently and has since dropped back down to 50. So is the final bottom in? Well, we'll just have to talk about that. Now, when it comes to the tariffs and what's going on here, or artificial intelligence, in my opinion, I think artificial intelligence, the NVIDIA chips, the powerful chips, I think it's all about robotics, and I think it's about autonomous automobiles. So you kind of have to use your imagination a little bit here. But the Chinese are definitely moving forward on this. And so when you think about this DeepSeek announcement, which we'll talk about, it's very important. Now, as I mentioned in the past, the book called The Psychology of Money discusses the fact that most public traded companies are duds. So what you're looking for, you don't want a stock where it breaks like an egg. You want one that is bouncing off the ground like a tennis ball. So you need to really differentiate here. And so if you take a look at this company here, this is a company called Mosaic. Now I went back to a 20-year chart. How would you like to be heavily invested in this company where it goes absolutely nowhere for 20 years? I mean, this is the importance of trend following. So in other words, when the trend gets broken, you just need to realize that, and this is one of the duds the guy's talking about in the book. So just be aware of the fact that, trend following keeps you away from these types of situations, because this is basically a trendless stock. Now, we know about what's going on with the tariffs, but is there more going on than that? And I personally believe it is. Now, Scott Bessent, who's Secretary of Treasury, came out a couple of weeks ago and he says the stock market, he was talking about the stock market, is having not a MAGA problem, but a MAG 7 problem. And so I believe him. I think he's right. Now, it was recently announced that Amazon is pausing data center leases. Same with Microsoft. They're cutting back on this. Now, the DeepSeek news was announced around February, so you can see where these stocks peaked when the DeepSeek announcement was made. So if you look at it mathematically, this says, DeepSeek makes deep cuts in NVIDIA. On the day that it was announced, NVIDIA lost almost 600 billion in market cap. And so you had NVIDIA, you had Meta, you had, again, these were continuing losses. So I'm just simply saying, yes, we know about the tariffs. We know that's an issue, but there may be more going on than we realize. So let's take a look at the market here real quick. Now, what I did is I shrunk the graph down to a 3-month graph just to make a point. Now, we made a low here on the 7th of April. Then we got a very strong rally, but unfortunately the volume was not higher than the prior day. So to get a follow-through day, you've got to have a meaningful rally, which this was, but the volume needs to be higher than the prior day. So just yesterday, we got a very substantial rally, and I know it's not shown on the graph, but the volume was higher. Not a lot. It was higher, though. So we did get a follow-through day, which is good news. Now, that's on the NASDAQ. Now, on the S&P, same thing. We got a very good, meaningful move here. Now, I will caution you by saying that when you're below the 200-day moving average, you just have to think defensively. So even though we're getting the follow-through day, it's a time to really just kind of move very slowly and be very selective on what you're doing. We bought a few stocks, but not much. We put about 10% of the portfolio to work. Again, the problem here for me is the aggression index. So you don't want to become super aggressive here. We've gotten, a death cross right here on the moving averages. And again, this is where we're comparing technology stocks to consumer staples, things like Coca-Cola and Philip Morris and things like that. So when those stocks are doing better, so when the line's going down, it means that the consumer staples are doing better than technology, which is just not a good sign. I've seen this before. But I will say interest rates are starting to calm down a little bit here. Now, you see the point here of the power index is a factor of time. So in other words, we're looking at the last 125 days as to what the 5-year Treasury note has done. And so over the last 125 trading days, the 5-year note is at 0.96. So we're starting to see some improvement here. If we drop below zero, that could mean that the Fed is going to cut interest rates. But that's how the indicator is designed, is to do that. So if you have any questions, please let me know. Thank you very much.